Hey, thinking about buying a home at a 7% interest rate? The rates are just about hovering around there, making this video super timely. Now, most people panic when they hear that number, 7%. But today, I am going to walk you through the real math of what 7% means for your mortgage, for your future refinance potential, and why waiting could actually cost you much more. So stick around. Hey, I am Ravi Ramachandran, the managing broker with the Rams Group. My wife Sijy and I help buyers across Seattle and the Eastside areas make clear, confident real estate decisions. And today, we are breaking down what it actually costs to buy a home at 7% rate and why it might not be as bad as it sounds. First, the psychological fear of that number, 7%. Now let's be honest, 7% sounds high because we all are comparing it to the 2.75%, 3% rates from 2021. But in the long-term historical context, 7% is actually closer to the normal. Now the emotional hurdle is real though, right? We have had clients walk away from great homes simply because the number scared them. Now fear doesn't pay the bills, strategy does. Now here is the real cost of comparison. Let's look at the math to put things in your perspective. Say you are buying a $900,000 home with a 10% down, that's an $810K loan, correct? At 7% interest, your principal and interest payment is around $5,387 per month. Now at 6%, it's $4,856 a month. And at 5%, it's about $3,900 a month. Yes, there's a difference of about $500 to $1,400 that we're looking at, but here's the thing. Home prices are continuing to rise, and when rates drop, competition is going to get back in fast. And waiting to buy could mean you're paying about $50,000 to $100,000 more, potentially up to $250,000 even in some areas, for more of the same home, pretty much. Yes, that's what we saw in 2021. Painful. And if bidding wars are back, that'll be the story. Now, I want you to realistically think about the refinance potential and the future gains that you're setting yourself up for. The upside is, if you buy now and refinance later, you gain equity faster and avoid bidding wars as a plus. Let's say you refinance from 7% to about 5.5% in about 18 months to even 24 months. That is actually a savings of $5,837 a month, drops to about $4,300 a month. Now, given that you paid down the principal and your home's value likely increased. And now this is exactly how savvy buyers are playing offense. Getting in now, riding the appreciation, and then refinancing later. Make sense? Also, in some cases, sellers are helping buyers with rate buydowns and closing credits or what have you to ease the short-term pain. All that said, is buying at 7% crazy? Not if you understand the numbers, which is what I tried to explain, and including the refinancing strategy into the mix and avoiding the cost of waiting. Now let's figure out what buying now looks like for you and your situation specifically. Now whether it's the right time to buy even. That said, feel free to direct message me, call or book into my calendar. My contact information is in the description below. Also feel free to drop your budget or questions you may have in the comments below, and don't forget to like, subscribe, and hitting that bell icon for smart buying insights weekly that I provide. And I answer all the comments that I receive personally so that you'll get first-hand information. That's it. I'll talk to you soon. Take care.